Credit is using someone else's money to buy things, with a promise to repay that money in a timely manner with interest. Credit can be in the form of loans or credit cards. The amount of money you borrow is called principal. The amount of money the lender charges you to use their money is called interest. And interest is calculated as a percentage of the principal. This percentage is called an interest rate. When you use credit, you have debt and can pay a lot of extra money in interest fees. Different lenders and credit card companies offer different interest rates, so shop around. And make your payments on time to avoid late payment fees. If possible, pay your debt early to save on interest rates. Here are some tips on how to establish good credit without a credit history. Open a bank account, whether it is a savings account, a checking account, or both. Be responsible on handling your accounts and do not bounce a check. Create your own non-traditional credit history. If you have services in your name, such as the electric, gas, and phone services, pay your bills in full and on time. And when you move, close the account. Do not let your roommate assume the bill from you because you are the only one responsible as long as the bill is in your name. And open a low-limit secured credit card. The company that issues the card usually requires you to deposit money into a special savings account. You are only allowed to charge an amount equivalent to the amount in your savings. Be sure to pay it off on time. Take out a secured loan. This is a loan that is guaranteed by something you own, such as a car, and be sure to make your payments on time. And apply for a credit card. Use it sparingly and be sure to pay the card on time. If you cannot pay the full amount due, make at least the minimum payment. If you do not pay your credit card bills on time, you will be doing the exact opposite of what you are trying to achieve, which is establishing a good credit history. Good credit means that you repay the money that you borrowed on time. It will be more likely for you to get a new loan for major purchases such as a car or a home in the future if you have a good credit rating. Good credit is very important. It is best to save for your wants and needs, but there are times when you will want to use credit. It makes sense to use credit to purchase things that will be of value after the debt is repaid. Good examples are a car, a home, or an education. Having a good credit history is an important part of maintaining a happy, healthy, and financially fit life. Bad credit. This is a serious problem. What most people do not realize is that landlords, insurance companies, and employers, not just banks, check credit records. Your credit report allows these companies to look into your personal spending habits, your payment history, and whether you have been sued and whether you have declared bankruptcy. A bad credit record is an indication that you have problems paying bills on time. You forget to write a check for the money, the electric bill, phone bill, and credit card bill. It indicates that more than likely you will also have a problem paying the monthly rent or monthly car payments. Lenders and landlords may not want to conduct business with a person with a shaky credit history. Likewise, an employer may not want to hire someone who does not demonstrate financial responsibility and maturity. A credit report is essentially your credit history. The credit report details what credit cards you have open and what type of loans you have, school loans, mortgages, car loans, and how long you have had the loans and the amount of the outstanding balances, what is still unpaid. The credit report lists not only credit card debt, but also lists debt from utility companies, phone companies, hospitals, banks, and etc. The credit report then uses these facts to generate your credit score. If you have paid your bills on time in the past, this is a good indication to all that you will do the same in the future. You can request your credit report from one of the three major credit bureaus: Equifax, Imperium, and TransUnion. And most of these you can find online under Free Credit Score. Your credit score is available to creditors and lenders only, but you can pull your credit report. You should pull your report at least once every 2 years to check for errors. If you find any mistakes made by your creditors or that companies have requested your report without your permission, immediately report it to the credit bureaus. This now concludes this PowerPoint presentation.